Hey folks, David Frost, MyStrategicForecast.com. You're here for another episode of Common Sense Market Analysis, Wednesday, March 18, 2015. Inside the numbers today, market on fire, Fed comes through. We're going to talk about that a little bit. We'll cover the S&P, SPY E-Mini Contract, crude oil, gold, interest rate in the bond market, and the dollar. And I have a little bit of extra info for you tonight, a little bit of inside the numbers and how I derive some of my targets anyway. So here we go. Let's go over to the SPY daily chart, and you'll see we had an enormous day today, right? There was like a 45-point swing in the S&P today from low to high, and $4.50 in the SPY. And basically, everybody knows by now what happened was, the market was signaling that it didn't like the idea of a rise in interest rates dictated by the Fed. Okay, that's basically what was going on the last couple of weeks. So just like her predecessor, Helicopter Ben, Janet Yellen today, she reassured the markets that the Fed is in their corner. She reassured the markets that the monetary policy is going to stay the same until it doesn't. And as long as the Fed didn't hear that we're raising interest rates here, okay, that's all that cared about. And then they just ripped the market higher. And like we talked about last night, 2071, I have to go over to the E-Mini contract because that's where I get my numbers from, okay? So the 2071, okay, was here. In fact, let's go to the intraday, okay? So here we go, all right? Sorry about that, folks. I don't know why that happens. 2071 is right here, all right? So, you make case that the market ripped high and went high through every number, and sure, I get that. But the point is at least in my work, I knew that, and I told you yesterday, that once the market got convincingly above 2071, okay, then it was lights out and there was going to be much higher prices and then some. Okay, and that's exactly what happened. So we can make an argument either way, and what happened, all I'm saying is we had higher prices, and that's bullish for the market right now, and basically the shorts took it in the butt. So where we go from here? Let's go back to the E-Mini, and I'm going to show you where I got my resistance point today, which was, okay, the previous close from this big red candle here, the high was 2096. So 2096 here, I knew was going to be a fair level of resistance. We went up and almost tagged 2100, but then we came back down and closed at 2092. So we closed below the high of this candle here. So what that tells you is the market wasn't ready just to bust through just yet. This here is the aftermarket. It's an overnight session. The market's up a little more. That doesn't really mean anything. So, but there was heavy volume, okay? So today we did the numbers. We did the volume. It wasn't the highest volume day, but it was pretty close. And not highest, but highest in the last few weeks. As compared to the high volume down days, okay? But it was up there. It was about even. So there's bullish tone for the market. There is higher prices coming anyway, regardless of whether we ever, on this move, I think this move's over, but, we didn't hit the downside target. And the downside target, remember, go back to the E-Mini, the SPY, the target was 203.50, give or take. We never hit it, and we just went right up. And I kept telling you this was going to be it anyway. Here was your second level, and then we had a third just in case. But the market was bullish, and it's going to make new highs. Remember this from December 18th? I don't know why that happens. December 18th, the high was 212.97. We talked about it a bunch of times. Okay, that's where we're headed, and higher. But so that's the bottom line. So that's what we have. What do we have for tomorrow? What do we have for the rest of the week? Tomorrow we may go up. We most likely will have somewhat of a non-eventful day. Most likely the market will pull back a little bit in the morning to work off some of this severely short-term overbought condition. and then we should find some footing. And in the E-mini, you can guess we'll find some footing right about 2085, in that neighborhood. If we got down to 2085 and the market was quiet, okay, there's a lot of support in there. I don't know why that happens. 2085. I can't do it. I can't put a line in. In this area here, 2085, there's a lot of support. If we got down there and the market was basically stabilizing and basically quiet, you could probably look for higher prices, and then we'll just take it one day at a time. All right, let's go to gold. Gold had a great day today. So here's one of those little inside the numbers I was talking about. This is something I don't normally show in these videos, but trend lines are important because the market draws the trend lines. I normally draw horizontal trend lines for you here and there, but these kind of trend lines, this is a channel. And trend lines are important because the market draws the trend line. I don't draw the trend line. I just put an approximate where these levels are, and then up here as well. And the reason I drew it in now is because one of two things is going to happen. Okay, you're going to bust through the trend line, and there's going to be a lot of upward pressure as long as you can get through this big red bar high here, which is basically 1200. I mean, I didn't mean to move that. Basically 1200. So let's find out. Yeah, 1200 on the nose. So as long as you can get above 1200, we could be in for much higher prices in gold. The problem is we have to first close above this channel. Okay, and most likely what happens with these channels is we rocket through it, and then we come back and we test it. And if we close above it and come back to test it, that's the moment of truth, because if we go back into the channel, we go back to the bottom. And the bottom of this channel by that time is going to be not nice. You're not going to want to be long gold. Okay, so right now, gold had a great day. We held 1145, which I gave you a bunch of times. Okay, the low today was 1144.90. We held it, and once the Fed spoke, and who knows why gold went up, it doesn't make any difference. All I know is the numbers, and the numbers are what's important. The numbers are how you make money. And once we held 1145 on a daily close, day after day after day, okay, it was building up enough momentum to go higher, and we went higher. So now we have to get through this channel, and that's a little inside the numbers for you folks that are paying attention, because this is going to be a big move either way. What do I mean by that? If we get above this channel and we start closing above this channel, gold has a lot of upside. But if we don't, and we get caught in this channel again, and we go back to the downside of this channel, by the time we hit the downside of the channel, we're going to be down at like $1,000 or less. And it could even be worse than that. Who knows? It depends on how long it takes to get there. The longer it takes to get there, the lower the price gets. Okay. Let's go over to crude oil. Another rip-roaring day today. What do you mean another one? We haven't had an up day in crude oil in quite some time, but we did have an up day today. But, I drew this trend line in because this is the bottom of our channel. Remember, we were in this channel here, and I'll draw the top in, just an approximation of where the top of the channel is. Okay, and what I've been saying is that when we were above this trend line here, the highest that we were going to get was 55. And I said, once we closed below this trend line, lower prices were coming. And here are lower prices. And today we hit a low of 42.05. And then we reversed. But the best possible scenario right now is to get to the underneath side of this trend line. You're going to have a lot of resistance there. And if you can get back in the trend line, we'll talk numbers and we'll see if we can get to the top. But right now, maybe there's a few dollars on the upside, and that's fine. And remember what I said, as long as we stay below 44 is bearish, above 44 is bullish. So use that as a pivot point. Use it as a line in the sand. You can trade oil above 44, and you can trade it below, on the short side, below 44 on daily closes. Okay, bond market. Let's go over to the bond market. Unbelievable. I mean, this TLT is just relentlessly going up. The bond market is relentlessly going up and yields are relentlessly coming down. Let's go over to yields just so you get the picture. Look what happened today in yields. They just got crushed right into the 50-period moving average and below. Okay, so let's go back to the TLT. We bought it at 124.25. All right, let's look at a weekly chart. It's even a neater picture. All right, if we can get over there. Okay, look at that. I know it's hard to buy when things are falling. It feels like you're catching a falling knife, but sometimes the hardest thing to do is the right thing, okay? The hardest thing to do is the right thing, okay? I trust my numbers, and that's why I'm able to do it. I know it's very difficult. I don't know how that got over there. Bought at, oh, I know, because it was it was on the other chart. Okay, yeah, so anyway, the point is that there's still maybe higher prices. It's just we're probably going to have to pull back at some point to just work off some of this fast and furious overbought condition on a short-term basis. But we got through that critical level at 129. It just kept going like a rocket. So you have to be trailing your stop for those of you that are in the trade. And I know you're trailing your stop because we've been talking about it. So that's a great trade. Anyway, last thing I want to talk about is the dollar. Okay, and we had a huge down day in the dollar. And check this out. Remember, I showed you the monthly chart of the dollar, and I showed you these trend lines and how we just busted through this trend line that said we were going to go up and really bust through 100, probably 105, 108, something like that. And then I drew this trend line in a few weeks ago, and I said if we get above this trend line, you know, it's even going to be further bearish, but we're going to have a tough time getting through it. And since it's a monthly chart, we have all month to figure it out. Well, guess what? In the month of March, if we close below this trend line, you could have a down couple of months. And then what would happen is, let's go back to the daily because here's where the rubber hits the road. You want to be in this buy zone to buy the dollar for higher prices later. If we can, and I don't know if this is a real print or not. This is from today, and this was all the way down at 94.76. And I don't know if that was a real print or not. I never saw the market down there, but I did see the print at the end of the day. I don't remember whether it was after the close or not. But we'll see. Maybe that's a telltale sign that the market's headed there. We'll see. But there's a lot of support in this area. And if we can get the dollar in this zone right here, you want to buy it. You want to buy it with the UUP. You can buy it with options. You can buy the dollar futures, buy the Forex. Whatever you do, you can buy the dollar for higher prices in this zone. That's where you want to be. All right, so I'm going to leave it there tonight, folks. Hopefully it's been helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.